Hello everyone and welcome to Crypto Cash Media. Let's get right to work. Shiba Inu token is having a slight pullback in the last few days, but Shiba army is stronger than ever. We will get through the rough patches. Also, we finally see some developments that will help Shiba emerge from the shadow of Dogecoin's success in carving out its own niche. These changes will guarantee that Shiba Inu does not continue to be treated as a merely speculative cryptocurrency chased by short-term speculators trying to make quick profits. Instead, with the most recent upgrades, Shiba will gain intrinsic usefulness, which any cryptocurrency needs to remain relevant. But before we get into that, the actual question is whether or not the Shiba Inu has suddenly become a valuable coin. NFT collaboration with the Shiba Inu. On the OpenSea, the first Shiba Inu developers disclosed that SHIB is now an acceptable payment mechanism for NFT, non-fungible token. Users can also sell their own NFTs and earn more SHIB as well. In addition, crypto is seeing two significant changes to its protocol: a reduction per block of the protocol's governance token bone and new reward distributions for its Shiba Swap decentralized exchange. Shiba Inu, like many other digital assets, has recently been subjected to intense selling pressure. However, as a result of these modifications, the digital asset is expected to recover quickly. What effect will the changes have on Shiba Inus? When comparing cryptocurrencies, the most often asked question is whether they have any intrinsic worth. For example, Bitcoin was created as a substitute for national currencies and wants to be used as a means of exchange and a store of value in the future. Ethereum, on the other hand, is a distributed ledger technology that enterprises are utilizing to develop new applications. For a long period, SHIB possessed no intrinsic worth to speak of. Now, though, things are changing. The token isn't utilized for anything specific, it's just there. The whole Shiba ecosystem's only purpose is to promote the token and aid in its appreciation and value. Investors now have a reason to allocate capital to this one. As mentioned in my intro, devs broke the news through the SHIB token Twitter that SHIB is an accepted payment method for NFTs on the OpenSea. The OpenSea is one of the largest and most popular platforms for the sale of NFTs. Thus, it is understandable why investors are excited about the announcement, as the development would provide the cryptocurrency with a significant amount of exposure. The most alluring aspect of Shiba Inu is its current price of $0.00000068. Granted, this is subject to alteration on a dime due to the nature of cryptocurrencies. Elon Musk might tweet something, or another firm could decide to accept the token as payment for their products. Therefore, predicting where it's going is a problem. You could argue the same thing applies to Ethereum and Bitcoin. However, both of those cryptocurrencies are generating significant attention from institutional investors, which has resulted in a little stabilization in their respective prices. Yes, there will still be ups and downs, but there will not be another crash like the one that occurred in Bitcoin in 2017. Part of that has to do with the utility of these cryptocurrencies. When it comes to the pricing of these assets, there is a great deal of conjecture. There is also a practical application for these tokens, which big financial institutions have recognized. At this point, we are unable to say the same about Shiba Inu. Things may alter in the future as a result of technological advancements. Nonetheless, if you purchase 1 million Shiba Inu, you will most certainly be expecting a rise similar to that of Dogecoin, which may or may not occur. Keep the golden rule in mind at all times. You should always keep in mind, never invest money that you can't afford to lose. In addition to the inherent risk and volatility of the space, if you allocate a significant portion of your portfolio to Shiba Inu, you stand to lose a significant amount of money. However, for bulls, the recent upgrades, which provide some concrete reasons other than pure speculation about why they are investing in this space, Binance and cryptocurrencies. A prominent financial regulator globally has stated that it is unable to adequately supervise Binance's cryptocurrency exchange goods, which enable customers to place supercharged bets despite the considerable danger presented by the products. Binance is a cryptocurrency exchange that is among the largest in the world. Even though Binance facilitates hundreds of billions of dollars in transactions every month, the Financial Conduct Authority said that its UK affiliate had failed to respond to some of its most basic inquiries, making it impossible to oversee the sprawling group, which has no fixed headquarters and provides services all over the world. Binance is headquartered in New York and has offices all over the world. The admission underscores the scale of the challenge facing authorities in tackling potential risks. Consumers frequently buying regulated products through nimble cryptocurrency businesses, which can often circumvent national bans by giving users access to facilities based overseas. The Financial Conduct Authority, FCA, censured Binance 2 months ago, stating that the company was not authorized to provide conventional financial services or to operate a cryptocurrency exchange in the UK. Other major financial centers have also expressed concern about Binance, but the company has continued to provide crypto trading to consumers worldwide. The UK regulator said on Wednesday that Binance's complex and high-risk financial products, posed a significant risk to consumers. It added that one of Binance's London-based affiliates, which is registered with the watchdog as an investment company, had supplied insufficient information on the wider group of products offered in the UK as well as other business details. That meant Binance's Cayman Islands Incorporated was unable to provide adequate supervision to its subsidiaries and affiliates. It stated that it was continuing to work with the FCA to resolve any lingering concerns that may have arisen. It went on to say that it had met with a variety of criteria established by the FCA in June, including the publishing of notifications on the FCA's website. The FCA launched a wave of warnings against the cryptocurrency exchange from regulators throughout the world. On the other hand, consumers in the UK can continue to trade derivatives and other regulated products offered by Binance. Keep calm. The exchange does not have a formal headquarters and instead relies on affiliates in various countries to access the traditional financial banking system. Despite the fact that Changpeng Zhao, the company's top executive, has pledged to increase compliance, financial watchdogs are skeptical of the rigor of the company's rules to prevent money laundering and the funding of terrorism on its platform. Binance had been building a ring-fenced UK exchange through an FCA-regulated unit called Finance Markets Limited that would have provided trading in cryptocurrencies against the pound and euro. According to former employees, it had applied to become a registered UK crypto company that pulled that application in May. The FCA stated that it had taken issue with Binance's responses to questions that it had raised earlier this year. The FCA believes that the business's replies to some inquiries amounted to a refusal to provide information and that the firm has otherwise failed to appropriately respond to the FCA's information requests. This was followed by the statement that Binance had refused to give even the most basic of information, such as trade names and functions, for all of the group's worldwide businesses. The exchange has indicated to the FCA that its UK operations are separate from other parts of the global group, but internal Binance documents seen by the Financial Times say that Binance is operating an FCA-regulated business and notes that consumers will be subject to the FCA regulatory guidelines. Binance said the information supplied to the FCA was correct, and that he would continue to conduct good faith conversations with his counterpart in the UK. The FCA notice also stated that the Binance UK subsidiary did not have any authorized senior executives. This was despite the fact that it has filed applications for the positions of Executive Director Compliance Supervision and Anti-Money Laundering Officer. Former U.S. Internal Revenue Service Special Agent Greg Monahan has been appointed as the Global Anti-Money Laundering Reporting Officer, according to a statement released earlier this month by the organization. It has also recently brought in former eToro executive Jonathan Farnell as Director of Compliance. Joe said last month Binance was hiring a huge team of people with very strong compliance. Shiba Inu coin is a new cryptocurrency that has just entered the virtual currency market. It is much riskier than more known cryptocurrencies like Bitcoin and Ethereum, and even Binance has cautioned its users against investing in Shiba coin, stating SHIB is a relatively new token that poses a higher than normal risk, and as such will likely be subject to high price volatility after the Binance listing. So, with all this information, are you still holding Shiba Inu? So with that said, that's all I've got for you guys today. I hope that you find this video informative and valuable. If you did, then make sure to give this video a thumbs up so we can spread the awareness of the Shiba Inu token to more investors to make more gains. And if you like what you are seeing, then make sure to subscribe to Crypto Cash Media and turn on the notification bell to stay up to date with all my content. Thanks for watching, and I'll hopefully see you next time.